Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. We got a good one for you because Bob has found some charts that really point out an issue with food inflation. So you might want to go make that Costco run now rather than later. And Bob's going to tell you all about it. So let's dive in.
Trade Genius.
Hey Bob, good trading day today. This is an interesting chart because you'd pointed out that fertilizer usually dictates food costs, and we're not, and like it's not happening this time around. We should be like our grocery bills should be rock bottom right now, and they're not. What's going on?
Yeah, it's really interesting. So this chart obviously pulled it off of Twitter here. So I want to give Variant Precepts their due on it here, but they show that it's coincidental a metric that as input prices fall on the farm, that usually get food prices to follow, and it's not happening. And remember, a farm has basically they have seed costs, they have fertilizer costs, equipment costs, and they have energy costs. Well, most of those are down. And so you have a situation here that prices for food should be falling, and it's not. And people are trying to figure out what the heck's happening here. And before we slide to the next slides here, what's interesting to me, I live in California where you expect food prices to be very, very high. Okay. And the prices I'm seeing from people on what they pay for food is probably twice as much as what I pay out here. And I think probably because California is such an expensive place to live and there's a lot of competition, it keeps food prices probably in check.
Mm-hmm.
But what I've been reading in the United States and in Canada and in United Kingdom, I'm like, oh my gosh, people are getting barbecued, to pardon the pun, on food costs, and I'm not seeing it fall, which is I think is really fascinating. And so if you go to the next slide, you'll see that this is the problem for the Fed. And so I think they temporarily have put the energy genie in the bottle, although energy costs are still higher than when this thing started. And that could also splooge up or down. Still, I know we probably think maybe energy is going to go down a little bit more before it goes higher, but food prices aren't going down. The Fed can't do anything about it. And it's not a market where there's a futures market for retail food. And I think that's where the problem is. I think, in the futures markets, Phil, as you know, right, they can beat up the cost of corn and soybean and wheat and OJ and all that good stuff. But once it leaves the futures market, it goes through wholesalers and it goes to retailers.
Right.
And I think they're holding on to the price. I think it's becoming problematic. And
that's the one thing, Fed can't control food, right? And that's something you've actually been talking about for a number of months, if not years, is that when they start to lose all of this money printing where they can't rein it in, they can raise rates and all this other stuff. They can't control the price of food because if your input costs are going up, your growing costs are going up, or there's a lack thereof driving prices up, which I think also is a bit in play here. They're screwed. Like that's a piece of the inflation pie they have zero control over. They can control stock prices and some other asset prices, housing they can control via rates, but food prices is the wild card here and could really throw a massive curveball in their operations.
Yeah, and look, the food industry is fragmented in the sense that it's fragmented and it has a number of levels to it. It's not like energy where ExxonMobil can drill it out of the ground and ExxonMobil refines it and delivers it to an ExxonMobil station.
Right.
Here, a farmer produces the food. It goes to a co-op. The co-op goes to a middleman. The middleman goes to the producer. The producer takes it to a retailer. Food manufacturer. So there's like 4 or 5 levels for food to get through, and you can't wave a magic wand where Congress says, "Well, I'm going to mandate food prices go down." You know what I mean?
Mm-hmm.
And the Fed can't tighten. If they tighten, it's not making a smidge of difference in food prices, and I think this is a big problem. And so, if you can't beat them, profit from it. So I'm going to throw a chart up here that I think is lining up again. Look, if the problem with food inflation sits between the wholesaler and the retailer, then you're going to see basically companies like Kroger take advantage of it. And if prices are falling at the wholesale level, well, Kroger does, they can delay those price decreases onto the customer, and they basically pocket the difference. And this thing has been swinging. This thing looks like the ES chart today, Phil.
Correct.
And we're talking the day before you guys actually see this, but look at these big ranges. I mean, these are 10% ranges for a food company. And right now it's setting up again to hit our 5-minute ranger. I mean, I think this chart's
yeah, it's the Ranger buy zone that it dipped into.
Yeah, I think it's hourly, and it's in the zone. And now
Daily.
you're just looking for it to break back up here, a couple more points, not points, but tenths of a point, and it's going to run back up to 50.
Yeah.
And here you go, food company, 10% return. Seems like a no-brainer to me. I'm keeping an eye on this one too.
Yeah, a good way to hedge your food costs, input costs, or your food inflation. Ride the food stocks back up.
Yeah, and Kroger and Safeway. Costco's a little different because Costco has a lot of home furnishings too and clothing.
Right.
So you want to kind of stay with just the pure play on the food side. So yeah. I thought I'd just share this with you guys. I was shocked. I was fully expecting, wow, if fertilizer costs keep coming down, energy costs come down, we should see food costs come down. But this might get delayed for a whole year, Phil, before any of that stuff cycles through. So everybody has to take their cut, I guess, in between the farmer and the retailer in order for us to get everything to get back in alignment again.
And that's all things being equal. Pray we don't have any hiccups in the growing season or there's not a drought.
Yeah, I mean, you see what's happening in California right now. So Sacramento Valley is a levee broke. They're getting another arc storm coming in to 15 inches of rain in the next 2 weeks in that valley. And you go from not having enough water to you can't plant crops.
Too much water, yeah.
And so, and then we don't even know where this cold weather is going to come in yet. We may get delayed out. There was a year 17, 18 where you had the big January thaw, and then February and March were brutally cold. And so, we may get a setup like that again, which delays planting. So, yeah. And then look, fertilizer prices may just come back up again too. So it's going to be interesting to see.
Well, I think that chart of the fertilizer disparity, because that's historically, we can bring this back up again. Historically, that's really played into each other, right? Like you said.
Yeah.
And this, all through the 2000s, the last 2 decades, going on 3 decades here, we've never seen a disparity from fertilizer prices dropping to food prices not dropping. And it makes me think, too, why the Fed is so concerned, and they're always using language of persistent inflation and not softening too early. Because I think food prices and food inflation is a very fragile thing, more so than we probably want to know. And it could be a case where prices never truly come back down again, and you know what I mean. There's a lot of things that could go wrong in the food supply chain side of things, and these prices start going back up quite a bit. And it's the one thing the Fed is, I think, very fearful of, and why I think it drives a lot of their inflation language and their hawkishness.
Yeah, and I think this is probably one of the slides they're probably looking at and saying we got to keep pushing on the yield curve higher, because we got to get this from being embedded into the system, and we got to blow this puppy up.
Yeah, if we can't control food, we're just going to press on everything else to keep it down and counteract it. And well, anyway, we'll keep an eye on it. But I think your idea of the food stocks to hedge that's a great idea.
Yeah, keep an eye on it. And just so you know, yesterday or earlier. Today we released the thing on platinum, and we're starting to get breakouts there, guys, too. So check out our other videos. Some of the stuff you think we're just doing daily stuff, but cycle back through some of our other videos, because we're giving you some good trade ideas. That these aren't day trades, by the way. These are trades you probably could, trade for 4 to 6 weeks, maybe even up to 4 to 6 months out, and you're gonna make some money off it. I mean, look, we shorted Tesla, had a great run. We shorted Airbnb, we had a great run. We're telling you what stocks to get into now. In terms of on the energy side, and now gold and silver breaking out, and you're going to see probably a move in platinum too. And I think we're going to make some money on the food stocks too.
Yeah, and we shared that risk off signal, and we were up at like 4,000 plus on the S&P 500, and that's come down at least 150 points since then. So, yeah, if you want these tools, head over to tradegenius.co or join us in the room and trade along with us. So, anyway, guys, thanks for watching. Appreciate it. Please hit like and subscribe. Let us know your thoughts on the subject of food inflation. We'd love to hear from you, and we'll see you on the next episode. Take care.
Trade Genius.